We're gonna start with who he is and why he does what he does.
Exactly.
Who are you?
My name is Sal. I work at Cardinal Financial. We're just trying to get the word out, and Cardinal is a Western-based bank. We're actually the first branch and part of the first Eastern division in the United States. Nobody knows who Cardinal is or what Cardinal does. So we don't have any bad press or we don't have any good press. We just have an open canvas to work with.
Fresh start.
Right. We started that in February 2019, and it's been a year.
Officially a year. The 19th,
wow.
It'll be a year.
Right, officially a year
That's crazy.
that we've been at Cardinal, and countless 5-star reviews. Everybody's happy, but yeah. So we're taking Cardinal from the ground up. We're building a name for Cardinal, and it's I like it because I've always liked to take charge of what I'm trying to do or where I'm trying to be. So there's really no better way to do it than to start with a company that doesn't have a reputation in the area that you work, and for better or worse, move forward with it, upward and onward.
Upward and onward.
Upward and onward.
Yeah, Cardinal Financial really is a great bank to work with. That's definitely one of the reasons why I started working with them. The technology is just uncomparable. None of the other banks are offering the technology that they are for their borrowers / my buyers at the time. They made things a lot easier. Sal just is literally 24/7 working around the clock. He always is available to answer phone calls, emails, whatever the case is, with myself, other people in the industry, borrowers. So that's definitely why I took a liking to the company itself.
Now I know that people do use the word literally, pretty freely, or but I have been on the phone at midnight with borrowers. I have been on vacation in another country on the phone with borrowers. It does get a little overwhelming sometimes, but I've made the conscious decision that, for the next 5 to 10 years, this is what my life is going to consist of, and this is how I'm going to earn people's businesses. In this type of business, you have to set yourself apart from Bank of America and Chase and Teachers Federal Credit Union, and, what better way than to actually be available when other people aren't working. So, my father was in finance and my grandfather was in finance.
Really?
No, they weren't. No, I know that that's what a lot of people want to hear, and I wasn't in finance. I didn't have a background in finance. I actually was a barber. I cut hair for a living for 13 years.
Oh, wow.
I mean, the only thing that I could stand behind was that I was always into numbers. I was literally home writing math problems on loose leaf paper while kids were out playing, and that sounds stupid, but that's what I was doing. Every video game that I ever played, all the games, everything was always math, everything was always numbers, and
And you've only been in the mortgage business for how long?
it's going on 4 years, but
So-
I didn't leave the barbershop until less than a year ago.
Literally less than a year ago.
Yeah.
So let's just pedal back. You obviously have your own P&L, your own branch for a reason, and that's, you have that entrepreneurial spirit that you can take lead. You have that influence over people that will trust you blindly to do things.
Right.
So,
Now, I always say this, and, I believe that, being able to help people and being able to do something that actually makes a difference, or people will look back and refer to me as someone that helped them and not somebody that they needed to deal with because they had something that they had to go through. That's always a bonus, and that's a plus. And I was cutting hair for people whose mortgages I was doing while I was cutting their hair. I was talking to them about their mortgage while I was cutting their hair. So I was like, what if this disappears? What if I don't have the new business? This is where my business is coming from. I never did lead business. I always did self-generated business.
referrals, his sphere of influence, always.
So I was nervous about it, and it all happened fast. So simultaneously, I left the barbershop. I started a team. I got a P&L. I got my own branch.
All in between that, very shortly, he was a realtor for a very small amount of time. But he was a realtor, a damn good one at it, too. His first year in real estate, you closed, 22 houses?
That's a separate story, and maybe
For another day.
Maybe we could tie it in. But the reason I started doing real estate was because in 2016, when the election hit, interest rates went through the roof.
unfortunately.
Right. And refi business almost disappeared.
And you were on a refi platform. That was the bread and butter of the team you were on.
Yes. At the time, the team that I was on was 95% refinance business, 5% purchase business. So 1 in 20 deals that were closing were purchases.
Yeah. Where would you say it is now?
50-50.
And you would say that's thanks to...
Now it's 50-50 with the rates the way that they are right now, which is phenomenal.
What? Yeah.
Because if this was 5 years ago, it would be back to 95.5.
Yeah, no, I remember when I got into real estate, people were taking out mortgages, for 5.5%. And that was literally a year ago. A year ago, people were getting, quoted, 5.5%. And we're in a good place right now, thankfully, where things have come a long way. But I'm just putting, numbers with numbers, and it's just insane that that's what people were paying. Yeah.
Yeah.
And then you get the phone calls at the bank sometimes with people that want to refi their mortgage, who hasn't refied since.
We're refinancing someone with a 6.5% interest rate.
Oh, that's
right
criminal.
Now, and they've been in it for 12
years.
years.
That's criminal. Poor things.
And you talk to this person, and they say like, oh, I just can't be bothered. And like,
yes, you can.
Right. Well, for someone that does mortgages for a living and that runs numbers through their head and crunches them, like, you realize that someone that says that to you has lost out on like, $200,000 in the last 10 years. You're literally talking about $15,000 a year in interest on a $700,000 loan. Like, how could you not have time for that?
Yeah.
And if you really made enough money to say that you didn't have time for that, your house would be paid off and you wouldn't owe $500,000.
Yeah.
So, when I first got in the business, these were conversations that I knew the answers to, but I was afraid to have because I didn't have the confidence. Yeah. And now I will sit on the phone with the borrower and I'll tell them that they're crazy. You're crazy. Mm-hmm. You're crazy that, if I send you a list of 5 documents and it takes you 2 hours and a call to your accountant to get this stuff for me, and I can show you in black and white on paper in a loan estimate that you're going to save $100,000 over the next 10 years, like, let me do this for you.
And I think a lot of the times people don't want to be bothered just because they know, like, previously when they first got their loan, it's through a major bank. So it's like they work a 9 to 5, they're spending their half an hour lunch or their hour lunch, like, I have to call the bank, I need to get in touch with the representative, and you're spending half an hour just trying to get in touch with the representative. But little do people know nowadays, like, with us, we're like 1, 2, 3. Like, you choose a text, an email, like, you FaceTime us, we'll walk you through it. Like, half of the time people don't know, like, what is my W-2? Like, they know your pay stub because that's what everybody's double checking every 2 weeks or a week. But, it's like,
well, you had people send us their tax returns when you ask for the W-2s.
Yeah.
Right? So, yeah, people have it in their mind that the mortgage process is something that, someone who should refinance has it in their head that mortgage was the worst thing they've ever had to do, and they never want to do it again.
Yeah.
And that's
one
it.
And done
right?
kind of thing.
It depends on who they used. But, is this going to take 90 days?
Right.
Like, 90 days. Do you know what kind of hoops we'd have to jump through for something to take 90 days?
And that's Cardinal Financial for you. Like, that's some of our models right there is what is it?
Technology is just crazy with the dashboard.
What is it? Reimagine lending,
right.
Those are the things, disrupting the mortgage, the mortgage industry. That's what we're about. Cardinal Financial is doing things differently. Like, people were dreading to do mortgages, to have to refinance. You have this guy that was in a 6.5% mortgage, and he didn't want to hear it. He'd rather spend that extra money because he had probably such a bad experience.
Right. Well, so we talked to him, I want to say like mid-January, and he asked us like, so he's like, all right, so, and this guy was a little like, what's the word? He was a little apprehensive at first, so you could tell he went through hell the first time in. And he's like, so when are we close? You think this will close by April? And I said, April? I said, it's January. And he's like, yeah, April is 90 days. He's like, you don't think we could close by April? I said, no, we're going to close in February. I said, you're not going to make February's payment. You're not going to make March's payment. You're going to get an escrow check back after closing, and you're going to save $650 a month.
Right.
Mm-hmm.
And he's like, I'll believe it when I see it. Like, that's how his mindset was, because whether it's because of what they went through the first time or just because of the reputation that we have as lenders.
Yeah, we're right under used car salesmen.
100%.
Yeah, no, we really are. And, it depends on the bank you use. It depends on the people that you deal with. And, what we've made a point of doing is, we're building an infrastructure and we're building a team where we could handle 15, 20, 25, 30 units a month as a team with me and the 2 loan officers that I have working for me who aren't here,
Johnny and Anthony,
and Fiore, who's been doing this with me for literally 6-7 years. I've learned a lot from him. He knows everything that he needs to know. So we all work on our own P&L. And to be able to close 25, 30 loans a month and to come from where we came from, we don't have to make $3 million a year to feel like we're making money.
Yeah.
You know? We can do the right thing by people. We could close the business that we close. We can keep everything, keep the rates competitive, and do the right thing by people, if I didn't say that already.
And educating them too.
Yeah.
That's another thing. But, you know, once... My whole thing is if you take care of people, the word spreads like wildfire. Yeah. And it's worked.
Oh, 100%. So
we've went from closing, before I had a P&L, you know, my average was maybe $500,000 to $1 million a month. From 2018 to 2019, 2018 I closed $10 million in business. 2019 I closed $31 million in business. And we have $12 million in the pipeline scheduled to close between February and March. We already closed 7 in January. I mean...
It's just the beginning.
It's insane, yeah.
It really is just the beginning, but, you know, we're taking the right steps. We're putting the horse before the cart, you know. And like Carolina said, when people come to us and we're dealing with a lot of millennials, kids that are in their 20s or early 30s, they're educated now. Right? They're reading, they're listening to their parents, for better or for worse. They're doing their research. And I have no problem with explaining to people how the clock is made instead of just telling them what time it is.
Yeah, literally. Sal, you know, borrowers will come to the office and hang out with us. They come with the purpose of going over their mortgage, their options, the scenario and everything. They just end up hanging out with us. Like, that's the environment we want, that we always have, is a very chill environment. You know, we're here for you. You don't understand things, you know, come on down. Like, we'll explain it to you. Sal has even gone out of his way to like invite people to his house on the weekends when because, you know, these people work Monday through Friday.
And they usually come tense and they leave happy,
really happy and
ready
calm.
To give you all those docs.
Yeah,
right. all their information,
or just keep going. Keep going. You know, there's situations where people will start. You know, like, what is that, the self-diagnose with Google, like WebMD.
Yeah.
People will do that with the home buying process.
It's always cancer, right?
Yeah, like
my finger hurts. Cancer.
Yeah, they can never get a home. They're
literally, like.
Well, that's the best part. You have the 2 people, right? You have the person that has an 800 credit score, makes $100,000 a year, doesn't have a debt in their name, and thinks they can't qualify. And then you got the person with a 510 credit score who makes $30,000, who's ready to buy a $500,000 house but has no idea how they're going to afford it.
And is on shopping on Zillow.
Right. We set those people up to buy houses, and I've spent a year and a half conditioning somebody to buy a house. Whether it's, you need to fix your credit, let us help you. You need to you need to wait until you have a 2-year average on your commission. Let's wait that out, and in the meantime, let's save up some money, and whatever it takes. You get the deals that are 1, 2, 3, and then you get the people that need help. But I worked exclusively with friends and customers from the barbershop because that's how I got my business. And then those friends and customers from the barbershop would start dropping my name. And especially once the deal started closing, it's been exponential. I mean, to go from $1 million a month 7 months ago to looking at $6-7 million a month, less than a year later, and God knows how much in the future, the beginning of the workday is for getting everything together, making sure you're on track, reaching out to people, of course, but, now we use texts and emails and stuff like that, and then we do a lot of business at night because that's when people are available.
People are available, yeah.
And I love calling people and having them say, like, you're still at the office? Yes, I'm still at the office. Right.
10 p.m., 11 p.m., midnight. We're still at the office.
Only my close friends. Those, I reach out to other borrowers from 6 on.
And reasonable hours, yeah.
Reasonable hours. But, I'll get an email at 11 o'clock at night from someone who might just be finishing up for the night and checking in with me, and then I'll call them. And they're like, oh, my God, what are you still doing? I'm like, well, I called you because you emailed me.
Yeah.
I do like helping people. I do like people sitting in a room with me and then leaving that room feeling better than when they walked in. I've always done that, whether it was in the barbershop or, whatever the case was. I like to explain things that I know about, and that's a very limited list of things, right? I know how to cut hair. I know how to do mortgages, I know how to sell mortgages, and I know everything that there is to know.
Yeah.
Right? So if you want to know why your mortgage amortizes, interest front loaded, or if you want to know why mortgage insurance is more expensive for you because you have a 680 credit score but your friend has a 740, or if you want to know why all these things are the way they are, I'm more than happy to sit and talk to you about it at 9:00 at night on a Saturday night while while
So
my friends are out.
this is just truly a passion of yours, is mortgages.
It really is, and people make fun of me for it because I've literally been asked, like, what do you do for fun?
Crunch numbers.
I work for fun.
Uh-huh.
Like, you work with me now, right? And where Carolina came from, she literally told me, she's like, I hate my job.
Literally. Like, it was, I think Laura was telling me ever since they moved to the office, because funny enough, my old job was on Broad Hollow Road.
Close.
Yeah. And
Literally
Laura
around the
was
corner.
like, Cardinal. I was like, yeah. Because I am very, like, I'm not
You're a
jumping
creature
shit.
of habit.
Creature of habit. I need to know, like, X, Y, and Z.
How much am I making?
How
When
much
am I
am I
getting paid?
making?
And yeah, of
Da-da-da.
course.
And, Laura's the opposite. She's like, oh, whatever. Like, coming from her bartending history.
I'll make
like,
it.
if I make $100, cool. If I make $2, whatever.
And I'll spend it all the next day.
And that gives me anxiety. So it took a long time until, like, recently I was like, all right, you know what? Let me go talk to Sal. Let me see, like, what it's about, this and the third. And honestly, like, when I went to go talk to you, I was like, this is it. I was like, this
Yeah.
is the move, and this is it. Because honestly, like you guys were saying before, like, you guys essentially do get, like, a bad rep. Like, before I even came into the business,
You were like mortgages.
I used to work in the car dealership business, so, like, we're right up there.
You're way worse than us, though.
Yeah, we were.
Car dealerships are way worse than
We
us.
won't name them, but we were.
100%.
I'll be like, I got a Sonata. You have a Sonata too? How much is your payment? $900. Oh, mine's $212.
Yeah, I'm $212 as advertised on the TV.
And I have the base model. Yeah.
No, yeah. I mean, but it's all the same thing. Like, I
Yeah.
speak to people online that are, like, apprehensive, and I'm like, listen, you're buying a $400,000 house. Like, I'm here to help you.
Yeah.
If you want to talk to me, like, I'm out to get you.
Yeah. And the second time I went to go meet you, I met Frank.
Right.
And I spoke to you and Frank. And honestly, like, before that conversation, I was like, I already know. This is it. But then, like, talking to Frank and to you, I was like, that's it. I'm jumping ship.
Well, I don't, and that's me, and you can attest to that because you've heard me on the phone now, but I don't hard sell people, and I don't talk people into doing something that they don't want to do. But for us, it's, you're making, it is what you put into it, and it isn't whatever you don't. So
Yeah. And, like,
it's not
we're
a matter
all real
of
people.
Right.
Yeah.
Yep.
So, Sal, Mr. Salvatore Rizzolo, why are you qualified to do what you do?
So this feels like a job interview.
Mm-hmm.
So I mean, basically, when it comes to mortgages, there's guidelines,
Yeah.
there's math,
Mm-hmm.
and there's the work aspect of it, because if you could do numbers and the guidelines, but you're not a people person, or you don't like to answer the phone, obviously it's not going to work.
Yeah.
So I guess a combination of all three of those would make sense. But I mean, from the beginning, when it comes to what we have to study and what we have to know, I passed my test on the first time. I studied for it.
Overachiever.
Right. Well, it was a tough test.
It is a tough test.
It was a tough test.
They made it real hard these days. Not just anybody
How
can
long did you
originally
study?
loans. 2 seconds.
No, I read the entire thing twice, which I thought was enough, and it was. But there's, it's a lot of numbers, percentages, ratios, and there's a few variables, and then there's the common sense part of it where, different types of loans have different types of rates and different types of structures, and when you become well versed in in what you're doing or what type of loans people are looking for, it doesn't happen overnight. And that's why, if you've been doing it for 15 or 20 years but you do one loan a month, or you've been doing it for 2 or 3 years but you do 10 or 15 loans a month, the experience is there.
It's the same. It's equivalent.
Right. Everyone that I've worked with, everyone that I work alongside of, and everyone that's part of the division and the team that I'm in is a very, well-versed, knowledgeable, and overachieving loan officer. I mean, we're talking about, 6 or 7 people that do over $40-50 million a year in volume. It's a lot of experience and a lot to learn from.
Yeah. Always bouncing back ideas off each other, questions.
Right. I'll, we ask questions from our desk, and we don't even direct them
to anyone
to a
specific. We
person.
just shout it out.
And anyone that tells you that they know everything that there is to know about mortgages is lying.
A liar.
I mean, Fannie and Freddie put out different bulletins every day. They change guidelines. They change debt to income ratios.
Yeah, these people are crazy. Fannie and Freddie. They just think who they
What's
are.
Going on,
Uncle
Franny?
Freddie and Aunt Fannie.
Yeah, they think who they are.
Like you just really want to ask them, like, who hurt you?
Right.
Yeah.
Who hurt you?
and and there is a lot, and they're
Side note: Fannie and Freddie are actually programs, not real people.
they're lending institutions, and they govern 95% of mortgage lending business in America. And what they say goes.
Pretty much.
And there's guidelines that you have to adhere to, and something as simple as, I don't know, this is something that I did today. Purchasing, let's not even go with investment properties. Cashing out on a house that you live in. Fannie requires reserves, but Freddie doesn't. But Freddie doesn't allow for any disputed marks on your credit report, but Fannie does.
That's really easy because, it sounds like men don't like confrontation. Then women want things to be very structured. They want to know what are we?
Right.
Yeah.
That's it. Yeah, Fannie and I can imagine that Fannie and Freddie have their own arguments.
I mean, but that's like the best way to explain it, though.
Yeah.
Yeah. No, it's the assumption that you want to deal with someone who's 55 years old, who's been in the business for 30 years, because they know what they're doing. I never bash anybody, whether it's people or banks or experience or anything like that. I could just speak for myself and say that, since I've been in the business, I've never started and processed a loan and had somebody go into contract on a deal that fell through.
Mm-hmm. Never.
No, and that's not because of me. That is because of me, but it's also because of the team that I work with and the people that I work with and for, who look over everything and see everything, and they've caught things like, no, this isn't going to work, or we can make this work. I got to call this person and tell them this isn't going to work. No, it can. It could work this way. And then at Cardinal, obviously, we broker out loans, and we have commercial loans that we could do. We have debt service programs, and we have
hard money
and stated income programs, and there's a lot of things that we could do to think outside the box, whether it's commercial or private capital. But obviously our preferred sector is people that we're comfortable with and things that we've experienced already, first time home buying and
refinancing,
cashing out, home buyers, cashing out, paying off debt, consolidating debt, things like that.
So thank you for that response, Mr. Rizzolo. You're hired. Can you start tomorrow?
Sorry, I'm happy where I am.
All right. Fair enough. I can't pay you anything more than 12 minimum wage anyways. But so with I think we're getting people excited about all this stuff, and honestly, if I wasn't in the business, I wouldn't understand you. Really, mortgage talk is another language. So let's break it down for people. What we do best, like you said earlier, first-time home buyers.
Well, why don't you lead me into reasons why Cardinal stands out from the rest, and things that we do that other banks don't.
Well, I know those very well. That's why I work with you guys now. But
technology for sure.
Yeah, the technology for sure. I love the technology that Cardinal has to offer, and even if, like, let's say, you yourself, you're working with someone, a millennial who's very tech savvy, they can use the technology. But even if you're working with someone who's cashing out of their house or, selling their home to go buy another home and doing their mortgage, but they're just, older, baby boomer, I don't know. Some are older. They're just not as tech savvy, and they don't want to be bothered with that. Like, they want, they'd rather talk to you. You're available to them still.
I actually prefer to be.
Yeah, I know that. I know that much.
We have technology at Cardinal that goes above and beyond what I even like to utilize. Yeah. So when we run an application for somebody, the Smart Doc folder opens, and they can actually upload all of their documentation through the portal without even texting me.
Yeah.
But then that's when the 1099s end up in W-2 folders, and the license ends up in the homeowner's insurance folder. So it's best that you
get it, so you know that you put it in the right places.
So if you want to call that old school, like, I'm still old school as far as, like, send me your docs, let me look at them, let me put them where they belong. But Cardinal has a dashboard that you log into. you see your entire loan. You see whatever you want to see, the amortization schedule, the interest rate, the term, how much you're borrowing, how much you're putting down, how much you're bringing to closing, a breakdown of closing fees. And all of that is done simultaneously. I mean, for the loan officers out there that are listening, or for anyone in the mortgage business that'll know these terms, I mean, within 20 minutes of talking to you on the phone, we're disclosing a loan, ordering an appraisal, filling out an entire 1003, ordering title, and submitting the loan to processing. And that's, places that I've worked or places that friends and old coworkers of mine work now, that's unheard of.
Even borrowers who come over to you with a loan that another bank was doing and they just couldn't get it done in time, they come over to you and you get it done within 5 days.
That's the 5-day story.
Yeah, that's another. Yeah, but
we literally closed the purchase in 5 days. But this is what happened. The deal fell through at a different bank because there were violations on the title report that the other bank wasn't comfortable closing with. That wasn't an issue with us.
Yeah.
So we had everything transferred over, and it was done very quick because there was a time of the essence in the contract.
Yeah.
But we closed on that deal in 5 business days.
Literally, yeah.
On the last day that these borrowers were allowed to close on, and maybe they would have got an extension and it wouldn't have been the end of the world. But the bottom line is that if it needs to be done, we could do it.
Yeah. And there's a lot of money on the line for those people. It was a serious thing. If they didn't close within that time frame, they were going to lose a lot of money.
It was $100,000.
Yeah. But and now the next thing, just going back, I was a realtor before. My background's in real estate. The reason why I loved Cardinal was because I wasn't going out my buyers with a pre-approval letter. A lot of banks will give me, and I've been in this situation before where unfortunately the bank will give me a pre-approval letter and then we're fully in contract and then it's the last day to close and then we get issued a denial letter. They're saying, sorry, we looked into things and it turns out you don't qualify for a mortgage. Everybody's time was wasted and then everybody's emotions and hopes, everybody was completely let down, the seller, the buyer, and it's just a really sad thing to see. So, the cardinal difference and advantage is that they're not sending you out with a piece of paper that you can essentially wipe your butt with.
Right. We use that terminology, and sometimes
it's the truth. Yeah, we say it words. Yeah, we use no profanity, but yeah, we use what is it that you issue realtors to go out shopping with buyers.
Right. So at Cardinal we differentiate a pre-qualification from a pre-approval letter, and a pre-qualification letter is how much do you make? Let me run your credit. How long you been working there? How long you been living where you live? Here's a pre-qual letter.
You're pre-qualified at that point.
Right? Based on what you told me, here's a letter. But we haven't looked into anything. And a lot of banks do this for you. And with some people, based on what they tell you, they have a W-2 job or they have good credit or, it's enough. But it's always a leg up or an advantage to actually take all of their documentation and submit it to underwriting and have an underwriter actually look on it. And based on the credit, the pay stubs, the W-2s, the bank statements, the assets, the credit report, the fraud, the whole 9 yards. Give these people what's called a pre-approval, which is basically a commitment letter, which is something that most people don't get until after they're in contract. Cardinal's a massive bank. They do, I don't know the numbers and I don't want to skew it, but they do a substantial amount of business, mostly in the western part of the country, but now, we're building up on the East Coast. Cardinal is a big name right now. I mean, when you apply for a loan online and you see Quicken and you see Rocket Mortgage and you see Bank of America, Cardinal's usually up there with those. Yeah. They're on, we work with Lending Club, we work with with those third-party advertisers, but now we're moving into the referral-based sector and we're moving into the first-time homebuyer sector.
Yeah.
We have a lot of really cool stuff brewing. I mean, aside from a pre-approval letter, which is basically a commitment before you start shopping, we'll actually lock an interest rate for a borrower before they even find a house, which basically protects you from the downside but gives you all the upside.
And would you say right now at this current moment, what's today's date? February 9th, 2020. Would you say at this current moment, are you locking a lot of rates right now?
I mean, I know that you know the answer to this.
I know, but the people listening to us don't.
Right. The bond is in almost the best place that it's been in the last 10, 15 years.
Yeah.
I mean, unfortunately, mortgage rates are tied to the 10-year Treasury note, and global markets, any type of war, any type of uncertainty among the people usually sparks a decrease in the Treasury
bonds,
notes.
which will spark a decrease in rates.
In interest rates.
Yeah, so, with the, what'd you say, uncertainty in the world? Right now,
I mean,
unfortunately, at this moment, it's hashtag coronavirus.
a lot of people are pointing to the coronavirus
Yeah.
right now because of what's going on with China. A lot of our business has to do with China. When uncertainty brews there, rates come down. And I mean, it's unfortunate to say that that's why it's happening. But if you're qualified to save a lot of money, or if you're qualified to buy a home,
because of this moment, because of what the rates are being offered at.
Because of what the rates are, and it means that, the difference between 5.5% and 3.5% is, it's
Huge.
just numbers.
Yeah.
But on a $500,000 mortgage, it's literally $10,000 a year in interest. So, whatever your salary is, only you know how much that really means to you. But for someone who says, oh, I don't have 20% to put down, or, I want to wait till my credit gets a little better, you end up waiting until the market moves and you're paying $30,000, $40,000 more for your house. So
might as well get it rolling now just to see what is possible.
Right. I mean, we do credit repair. We prep people to buy homes. We prep people to refinance. So whenever somebody says, when is the right time to refinance, or when is the right time to start looking for a house, I mean,
now.
It's always now. And that's, I'm sure that's something that a car salesman would say, or something that a life insurance salesman would say. But, there's research to back it up, and,
It's the truth, even if, and I tell this to people all the time, I'm like, even if you don't have plans to buy it out, to buy a house a year from now, or tomorrow, or 2 years from now, 5 years from now, whatever the case is, you eventually want to buy a house, right? Why not start looking into it now? Start preparing yourself now. Not to come off mean or anything, but why do you think what's the best way to prepare yourself for this? You're not the professional in this, It's like you're feeling sick. I mean, in certain cases, you can just easily, pop a Tylenol, but in other cases, you're going to go to the doctor, right? You're going to go to the doctor, and the doctor's going to tell you what's up, because you trust the doctor to give you the best diagnosis and tell you what to do to feel better. So it's the same thing, It's the same thing with that. If you plan on ever buying a home, start now. Start preparing yourself. People start putting themselves in we get phone calls at the bank all the time. Yeah, I'm in this situation now. I'd made the wrong moves in the past 5 years, unfortunately. Well, if you just would have had a simple conversation, no obligation, no commitment, no cost to you, conversation 5 years ago, you'd probably own a house right now. You'd probably own your second house by now,
Yeah.
So it's good to just start that conversation. It's like I said, no cost, no obligation. We're not gonna blow up your phone. We don't want to work with people who don't want to work with us. We really care about people, and we want everybody to be fully prepared on making this transaction, on making this move.
Right. I mean, I had a borrower call me the other day, and they said, Josh over at Long Island Jewish Hospital referred us to you.
Josh.
Yeah, Josh was great.
Josh is awesome. Hey, Josh, we love you.
So,
and Melissa.
Josh referred us over to you. He told us that you are the guy, and to not even bother calling anybody else. And we want to cash out of our house. What do you need from us, and when can we close?
Yeah.
And, we take care of these people because we took care of Josh, and look what happened. We take care of these people, and the same thing is going to happen.
It's going to keep coming, yeah.
Yeah, and if it's a matter of just making an extra phone call every day or every 2 days, just to make sure that we have everything from them and that they're not waiting on us. It's at the end of the day, it's a business. Yeah. But you're dealing with people, you're dealing with emotions, and sometimes you're dealing with anxiety. Sometimes you're dealing with people who don't know if they're making the right decision. It's our job. We're loan officers, but we need to know more than just like, here's your interest rate and here's how much you're borrowing. Yeah. Because that's for, I won't use any banks' names, but that's for other banks to do. Yeah. We're a mortgage bank. We do mortgages. We sell mortgages. And then you have banks that do a million other things. And I've had friends too where they're like, well, what am I qualified for? And I'm like, you're qualified for $500,000. But I wouldn't go out and buy a $500,000 house. And these are friends of mine, Yeah. Like, Does it have an accessory apartment in it?
Yeah.
Are you going to be, receiving money from anywhere else? Because as, from what I can tell, this is at the top of your budget. If you don't have any other income coming in, it's going to be rough from here.
If the monthly payments you're comfortable paying is equivalent to a $300,000 home, excuse me. There's no homes on Long Island for $300. But
you
yeah.
get a mailbox.
Oh, you get a mailbox for that. But if the monthly mortgage payment you're comfortable making is $350,000, right? That's the purchase price of the home. But you're pre-approved for $500,000. Go with the $350,000 home. Don't go crazy about it. And that's good. These are good questions to ask your loan officer. These are things to understand, because next thing you know, you're at closing and you're like, hey, what am I paying a month? And then you hear this ungodly number that you just, you're thrown off with. Like I just bring it back to you for, be prepared. It's better to know now than later on when you think you're finally ready.
Right.
If you're not ready, let's start. We'll get you ready, and we'll be there when you're ready.
Right, and that's why with first-time home buyers, we always tell them, come in.
Yeah.
Send us your documents and let us run your credit and get everything set up for you, but then come in, right? Because you need to understand what mortgage insurance is going to do to your payment, what homeowner's insurance is going to do to your payment, and if you buy a house too close to the water, what flood insurance is going to do to it, right? And
if you're going for a co-op, a condo, what are the maintenance fees, common charges, HOA fees going to do to your payment?
Right, and then our favorite thing about Long Island, the taxes.
Oh yeah,
we love those taxes.
When people hear most states I'm in Georgia, okay, your taxes are $3,000. Oh, I'm upstate New York. Your taxes are $1,500.
On Long Island,
I'm in Long Island. 5,000, 20,000, 50,000.
It's all over the place. It's usually high.
And there's a house on one block where the taxes are $10,000, and the house next door to it is 16, and you don't realize that that's $500 a month in your payment. That's your car and your car insurance, your phone bill, and some of your food. People are like, oh, what's my payment going to be on $400,000? That's a loaded question.
Yeah.
Are you getting flood insurance? Do you want your homeowner's insurance to cover more than, just a total fire? Is your house close to the water, or what are your taxes? Do you have village tax? What school district are you in? I mean, you have to ask people these questions.
Yeah.
You have to let them know that these are, you don't want to overwhelm people, but at the same time,
it's necessary.
Yeah.
Right. And you want these people to look back and think about you and know that you were the person that brought all this stuff to their attention,
and that you cared. Because a lot of the times people are on cloud nine, I'm moving out, I'm getting a house, it's always what I wanted, but there's never that person to stop and say, but did you think about this and this?
Yeah, sometimes there's there's vultures out there that they take advantage of these people with these dreams.
Get them into contract, get them into contract, get them into contract.
Sign, have a good day, bye.
Yeah. Unfortunately.
Well,
that's criminal.
We have
call the cops.
Heartless.
We have a borrower recently that wanted to spend about $550,000, but she was looking in an area where the taxes were $9,000, and she found a house where the taxes hadn't been grieved in a long time. The taxes were $17,000. I called her and I said,
American?
I said, yeah. I said, listen, you could still qualify for this home, but your payment, you told me you wanted to spend $3,300 a month, and your payment's going to be $4,000.
Yeah.
Oh no, that's unacceptable. I can't do that. So long story short, she found another house, and she's going into contract now, and the taxes are $8,500, and she couldn't thank me enough.
Mm-hmm. Yep.
Thank you. Thank you so much for bringing that to my attention. I mean, the listing showed $10,000. Thank God you told me that. And she'd be in contract right now to pay $4,000, and maybe other banks would have told her, maybe they wouldn't have, but
yeah, who knows? But we know for a fact that we don't do that. We bring everything to their attention, even if it's gonna hurt us, because we've been in that position where we've brought things to people's attentions that are like, yeah, never mind, I have to hold off for next 6 months to save some money or get in a better position.
No, and the same thing with refinancing. Sometimes it doesn't make sense.
Yeah.
And we tell you, listen, you're not going to save enough money for this to make sense.
Yeah.
Your credit score isn't enough to get you a rate that makes sense. And those people will send us referrals just as much as the people that we actually close refinances for. Because, being told that something doesn't make sense to someone who's looking into spending money is, how else can you describe us other than honest and, and we're here for you. We're not here for ourselves.
So we did a lot of talking about home buying and taxes and all that stuff. So think we should get into the exciting stuff, which is the home buying process or the mortgage process.
The numbers.
The numbers, yeah. So, mano a mano, realtor to
lender.
To lender. A lot of people think that the home buying process starts on Zillow. Contrary to popular belief, it does not start on Zillow.
It should never start on Zillow or end
and
on
then you need
Zillow.
like $50,000 in the bank.
Yeah.
Yeah, no. No. And they need like an 800 something credit score now.
Right. Or my house is worth $500,000. Zillow said so.
I was going to say why, because Zillow said so?
I have a Zestimate. Okay.
But
right.
yeah, so, first time home buyer. Carolina, are you looking to buy a home?
In the future.
Yeah, so it's going to be your first home?
First home.
Yeah, so before, because this is going to, you know the answer, but before you started in the business, or even when I was talking to you about the business, what did you think? What was like the first thing to the home buying process?
Oh, the same thing I was raised on. You have to have an 850 credit score, $30,000 to $50,000 in the bank. You need to work at the same job for 2 years.
And like, where do you start? Like, who do you look to start the process?
Well, if you ask my father, you go to any house and you're like, I have money.
I have money. You selling
Which is
your house?
always the best way to get a house.
Yeah.
For sale by owner and buying by owner. But
yeah. So, definitely the first step to buying a house is seeing what you're qualified for. How are you gonna go buy something if you don't know what you can afford or what you can spend,
or if you even qualify.
If you even qualify, or
right.
and you have the same exact thing backwards, the other way around. You have people who are being very modest and shopping, and then they find out they can afford more. They can afford more in purchase price, and they can actually afford it month to month in their payment.
My favorite is the people that save up 20% because they think that they need 20%.
Mm-hmm.
And mortgage insurance, when you're talking about a conventional loan, mortgage insurance is based off of your credit score
Mm-hmm.
and your LTV, which is your loan to value.
Yeah.
How much money you're putting down versus how much money the house is worth. So in certain cases, in New York especially, you don't even need to put down 20% to avoid mortgage insurance. You just need to have...
Really?
Right. You need to have 20% equity...
Get out of here, Sal.
...in the home based on the appraised value. So I've had situations where the house appraises for maybe $15,000 or $20,000 more than what the borrowers are purchasing it for. So they can actually keep that money in their pocket and still pay no mortgage insurance.
Mm-hmm.
And when people find out that, for every $20,000 you borrow, give or take, it's about $100 a month, people are like, oh, I don't want to put down $20,000 to save $100 a month.
Yeah.
And, in most cases, you shouldn't. I mean, interest rates are in the 3s right now.
Yeah.
It's the cheapest money you're ever going to get.
Mm-hmm.
And whatever money you put into your house, you're not going to get out without refinancing.
Yeah.
So this is something that I go over with borrowers and clients and friends of mine ad nauseum. Like, your parents told you need to put down 20%. And when houses were $100,000, that probably made sense, and it might have been the right thing to do, and it still might be, but let's look into your situation.
Yeah.
And see where you got $1 million. Great. Yeah, put down 20%.
Yeah.
And
So it is very important. The first step in the home buying process is speaking to a lender. It is seeing what you're pre-qualified for. And one of those things that they have to look into is your debt to income ratio. And the only way they can really look into that is running your credit. So, that's a little bit like of a tough pill for people to swallow. Like, oh, you want to look at my credit? You want to run my credit?
Right.
Like, what do you say to people when they give you a hard time? They're like, nah, just tell me what I can afford. Like, I told you how much I make a year. I have this car payment and these other bills. You tell me right now, what can I afford and what's my interest rate? What do you tell them?
Well, luckily, it's been a while since I've had to, explain to somebody that a credit report is necessary. Being that I deal with most referral business, people aren't really hesitant to give me their social security number or give me their birthday, but it can't be done.
Mm-hmm.
I mean, I'm never going to give you a quote, a payment, a rate, anything without looking at your credit, because Credit Karma is wrong. Your Bank of America, Equifax website, credit it's just not, it could be right, but often it isn't. My Credit Karma is roughly 95 points off from my
actual score,
Tri-Merge score.
And yeah, that's the truth. I had recently I have a buyer who, you're doing their refinance right now. I work with them as an investor. They're investing right now, but she's refinancing her own home. And we asked her, what's your credit? And she said a number, and then you ran her credit, and it was actually, 60 points higher than what she named, what she told us. And she's like, oh, so-and-so site or whatever.
Karma,
yeah.
or one of those
She's
sites.
like, whatever it was. She's like, oh, that's what that I saw there. I'm like, well, they go off a different algorithm. It's not true, but
yeah, and I'm not taking anything away from Credit Karma. They monitor your credit, and if I run your credit, they'll tell you within 3 minutes that I ran your credit, and it's good to have them for that. But don't call me to tell me what your credit score is. Mm-hmm. You're calling me for a reason.
Yeah.
I'm going to pre-approve you. I'm going to pre-qualify you. I'm going to, unturn every stone and make sure that you're actually qualified to buy this house. I can't do it without your credit report.
Yeah. So
and I won't try.
Yeah, in that process, the first-time home buyer, they come to you, they give you all the information to run their credit. What else do you ask for in that initial conversation moment?
So there's a few questions that you ask, and based on the answer, you might have to dig a little bit deeper. But you need to know what they make, and you need to know whether it's salary or hourly or commission based, because that affects the approval, right? You need to know how long they've been at their job. You need to know if there's been any gaps in employment. You need to know how long they've been making what they're making. There's a lot of questions that need to be asked. And, when you go on these random websites and you punch in, how much do you make? $80,000. Well, have you made $80,000 for 2 years?
Yeah.
Has it been consistent? Is it commission? Or what kind of job do you have? That's come with time and experience and just knowing the right answers, the right questions to ask and answers that I need. But, you find out about their job history. You find out where they live. The underwriters have their own set of things that they look for. And obviously, you need to vet the buyers, too, and make sure that they're not trying to do anything shady or anything that's going to cost you your license or, or anything. I mean, the house that they're buying, are they going to live in this house, or is it an investment? Your interest rate is way different when you're buying an investment.
The amount of down payment you're putting down is way different.
Is way different. Everything is different, So, our license is our livelihood.
Yeah, but sticking to home buyers, first-time home buyers. So you run the credit, you find out their job history, where they live, what their plan is. Once you get all these things together, you qualify them. You say yes or no.
I pre-qualify them.
Pre-qualify them.
I give them a letter that says that they're qualified to buy a house for $400,000. And then I ask them to send me all their documentation so that I could submit their file to underwriting and get them a pre-approval letter. And the pre-approval letter is basically, we call it a pre-commitment. The underwriter has looked at their entire file, their assets, their income, their history, and their residency, and has committed to lend them money based on, let's say, a clean appraisal, a clean title, and things that aren't going to happen until after the contract. But, having an underwriter look at your situation is huge. And for people that are selling a house with a realtor that understands the process, it's a big deal to be able to say that this buyer has been vetted by an underwriter. And, we do that for our buyers. We could lock their interest rate for up to 90 days while they're shopping for a home.
Yeah.
And when they go into contract, if the market has gotten any better, we can actually float their interest rate down. But if the market got worse, at least they're protected.
They're safe, yeah. They're secured.
Cardinal lets us do that stuff just because of how big of a bank they are, and how
lending reimagined.
They really have committed themselves to buyers and first time home buyers specifically, because at least for us, I mean, that's who we're looking to help, because I was a first time home buyer 4 years ago, and I remember how I felt while I was buying a house, and I wish I had me.
Especially after, the unfortunate chain of events that happened.
My first house?
No. Well, I'm saying just in the industry in general. It just left, you have, personally, my parents went through that, the, what was it? Market crash and everything. My parents went through that. So
call it the housing crisis.
The housing crisis. It was a crisis.
And that's what's basically, put people on edge now, and some people think we're heading towards that. But I could assure you that you're not purchasing a home unless you're actually qualified to do so anymore. So
like, and you definitely named it right there. You know, you are asking them all the right questions. You're first and foremost running their credit to see, you know, all those little dirty details. And then you're asking about their job. You're asking very specific questions: hourly, salary, or commission. These are, like you said, they're very important to know, because it's depending on what situation it is. You know, the qualification, the loan amount, the interest rates, all going to be different. And then you proceed to ask
and their documents
so that we can actually send to underwriting, because really, you know, as much as you know the person personally, or they call you up with like their story, how they want to buy a home, and you start feeling for them and you get emotionally attached, the underwriter really has the ultimate say whether or not the person is going to get a home or a loan, if they're going to qualify for the loan or not. So, you know, you get all that stuff out the way before these people even start shopping.
Yeah.
So that definitely sets you apart from other places. It's huge. And just to go back, like I said, you know, me being a realtor, that's why I decided to start working with Cardinal and spread that message, spread that word. I think it's so important. I've been in those situations as a realtor with a buyer where we're ready to sign contracts and we get that letter like, yeah, you don't qualify. Like, now you tell us this, you know.
No, and you've sent us countless business, and it's, you know, it's always appreciated, and that's why, you know, that's why we invited you in, or why, you know, we're lucky to have you, I should say. But you know, what Cardinal offers is above and beyond. It really is, and that's why we made the move here. And every day they're coming out with new things, and they're adding things to the program. And, you know, our LOS is proprietary.
What's LOS?
Loan operating system.
Okay.
Or loan origination software is probably the correct acronym. Yeah.
Acronym.
But, you know, most companies use.
What do they use, Sal?
I'm trying to remember now. I haven't used them in so long. We used
It's like, okay. So when I got into the business, I was definitely hopping back and forth between deciding what I was gonna do, whether it's mortgages or real estate. But literally, and I'm just talking like, you know, a little bit over a year ago when I got into the business, I'm looking at some of these loan originating softwares, and it's you're looking at them and they're such an eyesore, and you're looking at your computer screen like, does it have a butt? like one of the, you know, the old computer screens, like what am I looking at? Is this from 1990? Like, this is so outdated. So that's another thing too that I love about Cardinal. It's definitely 2020.
It's user friendly.
It's very user friendly, easy on the eyes.
Yeah. So, I mean, I guess, you know, in short, we'll do this again. You know, we're gonna do this hopefully once a week. And
wait, so are we done with the mortgage loan process?
No, I guess not.
Oh.
All right, let's start over.
No, we're not starting over. We're gonna continue this. So we ran the credit. We got the nitty gritty about their life. You know, what do they do for a living? How much do they make? What their plans are? Now we got their documents. We sent it to underwriting. Underwriting gave us the green light, you know, with a couple of conditions, of course, because that's what they love to do. But so they gave us the green light. Now we're good to go. You pass it on to the realtor. They have their own realtor, or, you know, you can't stop them from using Zillow. You can only advise them against that, but they do what they want to do ultimately.
You can't save them from themselves.
Yeah.
You can only try to. Yeah.
So, you know, they start shopping for their home, and, you know, during, you know, in a simple answer, during that process of shopping for a home, are you doing anything else with them? Are you touching base with them in any way, asking for anything specific?
Try to say once a week.
Touch
you know,
base with them.
we touch base. Hopefully we know the realtor that they're working with. We touch base with the realtor. We just make sure that there's nothing else that we have to do or anything that they need from us.
Yeah.
We update pay stubs. We update bank statements. We have to update credit every 90 days. Other than that, I mean, you know, they're in good hands. You know.
Now, during that home buying process, right? You got them pre-approved. They're good to go. Is that concrete? Like, yeah, you got this pre-approval, or you're pre-committed. Is that concrete within the moment you hand it out and them going out to look for a house?
I mean, at that moment, they're pre-qualified and they're pre-approved.
Now
they're
in that time, in that moment, but in that time span, are they? Like, is it concrete? Is it set in stone?
Well, you can't lose your job. You can't, or you shouldn't buy anything that you don't already own, whether it's a car or a boat. You know, no new loans, no new credit, no new jobs, no, you know, or at least run it by me.
Yeah,
you know?
call you first. Better call.
I've had people, change jobs, and obviously if you found a better job, you're going to take a better job.
Yeah.
I'm not going to tell you not to. But this is what we're going to need based on the job you're taking. Are you going into self-employment? Are you going to be on a 1099? Is the pay structure different? Mm-hmm. I just tell people before they make any type of change in their financial situation, call me. And then once they end up finding a house that they like and they go into contract, all of that takes place on the realtor end, which, we'll elaborate on next time.
Yeah.
But once they're in contract, if it was done right and it was done ahead of time, we have mostly everything we need. We're waiting on an appraisal.
What's an appraisal?
An appraisal determines the value of the home.
Mm-hmm.
So when a buyer is looking to purchase a home, we have to make sure that what they want to spend on this house or what they're going into contract to spend on this house is actually at least what the house is worth.
Because the bank won't loan you money.
Right. Well, we're not going to lend you $50,000 on a car that's worth $5,000.
Yeah.
Right. And the same thing when it comes to houses or anything else in general. We want to lend you money based on what the house is worth. If you have to put 10% down, you have to put down 10% of what the house is worth, not 10% of what you're willing to pay for it.
Yeah.
Because you might just have a big appetite or just something that you really love about the house. The house has to be worth it.
Yeah. And then, so that's appraisal. Now, in that time between two, I think it's really important to touch on this because it has set the home buying process back. And this particular thing has cost people the homes that they're interested in buying. And that's large deposits. Some people just like saving their money physically, in cash, putting it under under the mattress kind of thing. So what do you say to people like, hey, I have 50 grand to put down, but like 10 of it is in cash or 20 of it is in cash. What do you say to those people?
Well, there's rules as far as seasoning goes, and there's rules as far as large deposits go. Large deposits, depending on the program, are based on your income. The long answer is that if it's a conventional loan, you're allowed to deposit up to 50% of your monthly income without the underwriter asking where it came from. On an FHA loan, you're allowed to deposit up to 1% of whatever your loan amount is without the underwriter asking for it. But the short answer is, again, just come to me.
Yeah.
If somebody gave you
better call Sal.
$15,000 in cash because you just got married, that's great.
You just hit
Don't
Atlantic
put it
City.
all in the bank. It's a gift. The gift has to come from somebody. I mean, almost every program that's out there for home buyers and people that are actually going to be living in a home allows for a gift.
Yeah.
So don't have your uncle give you $10,000 in cash and then you go to the ATM and put it in.
Just deposit it.
Yeah.
So,
we go over all this, but,
Yeah, we're really, really just running through the home buying process because we're skipping a lot of parts on other aspects. We're just focusing on the mortgage end here. So, they found their home. Great. And then we're in contract and you're calling them, touching base with them, updating pay stubs, updating the bank statements and all that stuff. Now, disclosures and closing costs and all that fun stuff. We
go over everything, in detail, and it depends a lot on the house. But, New York specific, you pay mortgage tax, which is 0.8% of the loan amount. You buy a house for $500,000, or you take a loan out for $500,000, you have $4,000 in mortgage tax. You have a recording fee. You have a deed recording fee. You have title insurance. You have processing and underwriting. You have
Ay, caramba.
Right. You have your escrow set up.
What's escrow? That's easy, Sal.
No, it's easy, but I feel like I know we could pause this. I feel like we're gonna be here all night.
No, we're almost done.
No, we're really not. I feel like we're gonna rush it. Like I feel like we have enough for today, and that we should.
Well,
do
they can chop
podcast.
it up however they can.
I know, but it's 9:45.
Okay, so let's just finish this.
All right,
Or to skip the escrow.
We're at escrow.
Okay. Keep going.
So now we have the accountant, we have the attorney, we have the title insurance, we have escrow, we have the appraisal, we have closing costs, we have stips, we have conditions.
I think we're gonna have to cut this all out because you're speaking a lot of mortgage jargon here.
Right.
All right. So that's fine. That's fine. No, that's fine. Huh?
Before you got into the
Right.
process anyway, so it's like all of that can be one thing, then it
Right.
Like,
But
One whole
even if
thing.
we don't jump the
Okay, maybe part
podcast
one,
and
part two.
Yeah.
maybe we need to do something else that'll go up first or whatever they think.
Whatever they think, but at
Oh,
least they
yeah.
have the content to work
Yeah.
with, so
we
it's
have
fine.
content to work with for now.
But all right, so we're at closing, and you're just now you're at the point of updating documents, calling them, letting them know, like, hey, congratulations, the rate went down. We were able to float your rate down to a better rate, or congratulations, the bond went up, the rate's up, and you're safe.
You're safe.
Like, so you're calling them and doing all these things, and just now we're at closing. We're, like I said, we're skipping through a lot, but we're at closing. It's closing day, yay! What do you do on closing day? Is there anything specific as a lender that you need to do on closing day?
I mean, we try to, or we hope to have closings at our office.
Mm-hmm.
We have a new office in Melville. We have a few conference rooms that work great for closings. So if it's convenient for everybody else, I like to be at my closings, especially on purchases. Most of my clients I've met face-to-face before, but, sometimes it's nice to pop into a closing when they've never met me before, and they're like, oh, who's this 31-year-old kid that just opened the door for me? I'm like, no, I'm the one that just lent you $450,000.
Yeah, just put a pin
Full
in
head of
that.
hair
Yeah.
at 31.
Put a pin in that. Literally, Sal does not put his pictures on his business cards or anywhere where his number is along with what he does, because he doesn't want people to not call him because he looks too young.
I've had people tell me I look younger than I am, and I know that's how it is. And it's it's
still
kind of
get
risky.
ID'd.
Yeah, and I still get ID'd, and it's kind of risky to think that, like,
What do you use?
if there was 7 of us in a row and you had to pick someone who you wanted to handle your mortgage process,
Mm-hmm.
based on visuals, it might not be me, but I'm probably your best choice.
So, you meet the person, finally, you open the door for them. They say, hey, thank you. They think you're the receptionist or something, or the junior.
Right.
And then you finally introduce yourself like, hey, I'm Sal Rizzolo. I wanted to finally meet you face to face. Congratulations.
So we walk them into the closing room. The buyer's attorney is there. The seller's attorney is there. The title closer is there. The
bank.
The bank is there, and the buyers are there, and the sellers are there. And it's a nice packed room. And 9 times out of 10, if everything's gone well, everybody's happy, and the sellers are glad to be moving on, and the buyers are happy to be moving into a house. The attorneys crunch the numbers and explain everything to the borrowers one last time, and they get the keys to the house. Sometimes it's not that pleasant, but that's what the attorneys are there for too.
Yep.
There's always 2 sides to a story, and when there's a disagreement, that doesn't change. So that's what attorneys are for. We try to stay out of that.
Yeah.
The realtors hang back, their job is done. The loan officers hang back, their job is done. But it's everyone works together, and we've done seminars recently, and we've put together a great team, and there's attorneys that we've worked with countless amount of times, and there's inspectors and realtors and insurance agents, and
Whole 9 yards.
yeah, and I mean, the most important thing to remember, and no matter who you ask, you should get the same answer if they're steering you in the right direction, but you start at the bank. You have to know what you're qualified to purchase, and you have to know that you're even qualified to buy something or to refinance. So, when you're looking into a mortgage, whether it's for a purchase or a refinance, I mean, when you're buying a house, you could talk to a realtor, you could talk to an attorney, you could talk to an inspector, but if they don't point you to a bank or to somebody that's going to tell you what you're qualified to buy, you're starting in the wrong place.
Yeah.
And if you start at the right bank, we could take care of you from A to Z and make sure
And continue taking care of you.
and continue taking care of you.
When it's comes time to refinance, when comes time to cash out of your house, to consolidate debt, or to make some home improvements.
Or you're going to sell and move on.
Yeah.
And,
We'll always be there for you. Always.
show them the sweater.
Oh, ready? I have my Cardinal Financial sweater that Mike Bronstein, he's a what is his exact title? Producing branch manager.
Yeah, he's a branch manager.
Yeah, he's a branch manager over at Cardinal Financial. He made me this sweater. It says, "The vision is
A marathon and
Yeah.
not a sprint.
the vision is a marathon and not a sprint." MSB, Michael Scott Bronstein. And then I got always repping Cardinal at the gym. You never know, someone's deadlifting and they see my sweater.
Her schedule has not allowed her to go to the gym.
Unfortunately, I've been eating a lot of chocolate, gained a couple pounds. You got that? All right. But yeah, I think that's a good place to wrap it up. Yeah, this was exciting. We covered a lot of bases
it was a
here.
good first one,
and
for sure.
And yeah, there's so much more to talk about because this is a big world. Like, we've been naming a million things, and we really only talked about you, the bank, and why you're so amazing, and why people should trust you blindly. No, I'm just kidding. But
we'll try to pinpoint and
everything,
and sectionalize things and make it a little more specific moving forward. But I hope that at least people got a small gist of what Cardinal is about, and then as we expand on it and we talk about lending, whether it's the intricacies of purchasing, refinancing, I'd love to get into real estate investing and why leveraging is one of the most beneficial investments that you can make, and how it's possible. People think that they can't buy a second home once they own one, and there's a lot of myths that I'd like to bust, and there's a lot of
the only way we can really do all this is if the listeners review us, they rate us.
We ask for like, share, comment, swipe up.
Yeah, the only way.
Please buy our coffee mug holders.
The only way we can really get the proper answers for everybody listening is if you rate us and review. Well, not rate us. You're rating Sal. This is his podcast. If you rate Sal, review him, and
let us know what you want to hear.
Yeah, let us know what are your hard-hitting questions. What keeps you up at night when it comes to home buying and mortgages.
And the questions are out there because at our last seminar we got a bunch of them.
Oh my God, we were overwhelmed with questions. I loved it. I loved it a lot. I love that the crowd was participating. And a side note, we have another home buying seminar coming real soon.
We have a few events.
We have a lot of events coming up.
And I think next podcast you could really set in stone and let the people know
where to see us,
where they can come see you if they want more one-on-one.
Yeah,
we have a lot of events.
We're going to be doing a lot. I mean, we're going to be doing continuing education for realtors. We have this idea where we actually want to do maybe once every week or two. We want to do a seminar for realtors about the mortgage industry so that they understand the things that go on our back end, and they know what questions to ask to their buyers or to the people that are purchasing their homes. Like, oh, you're moving here from Jersey to New York. Do you have a job in New York? Like, how's that? Like little things that realtors don't know. Some realtors do and some realtors don't. But if we could provide any additional value to realtors or to home buyers or to anybody that wants to know about what we know about,
leave us a review.
And
let us know. Realtors, come on,
like
come on. Yeah, like
drop
below.
Click the link below. Share, subscribe. Yeah, point to the top.
Tell all your friends, everybody. If you're in high school, tell your parents. If you're gonna graduate soon, come see us.
Especially college. We need to touch on that next.
Everybody,
how does student loans affect?
Yeah, we have a million questions.
Yeah.
Let's just take care of as many of them as we can next time. But I mean, at least I feel like we have things to talk about next time, and hopefully people want to hear it.
All right, guys, it's been great. Oh, I love you guys. This is the dream team right here. I love it.
We'll bring everyone else.
I was gonna say along with everybody else in the team,
Yeah.
Anthony.
We'll need 6 mics.
Don't worry, you'll meet them.
Mics, yeah.
You'll love them.
So, all right.